Well, here we are on another episode of Bricklet Buzz Live. Thank you for those who are choosing to join with us live. Good to have you on board today, Greg, Mr. Dixon.
Great to be here, Ray. As normally in my COVID cave, my bunker.
Your COVID bunker. How are you and the family doing? You doing okay?
Loving it. Can't. Very close. We're getting very close together. 24/7.
Well, that's what happens when you choose to have 4 kids, dude.
I know. And yes, it's nice and cozy. That was good. Yeah, it's lovely. The weather, being beautiful weather like today, it does make it easier. You can get out, backyard, whatever. It's nice.
Yeah. And for those of you who are listening in, hopefully you and your family, hoping that you and your family are all doing okay in these challenging times of lockdown and still the uncertainty that COVID presents us.
Yeah.
And staying safe.
Yeah.
As I keep saying to my kids, we just got to look at what we can do and make the most of that. And there is some benefits of being locked down in creating relationships and also thinking outside the box of things you can do that you wouldn't normally do.
Yeah, I reckon.
Yep.
Yeah.
Well, I think everything in life you can look at it as glass half full or half empty. You know, Ray says it a lot. It's like you control what happens in your space.
Yeah.
Everything that else is happening externally to you, how that has an impact on you, you control how that impacts you. And I know there's a lot of people out there facing, you know, financial struggles, emotional struggles, and things like that. Reach out to people that are in your support network. Hopefully, have friends and family, and just lean on them in these sort of times. And you know, I've done it over the last couple of weeks. Just rung up just all of my friends and just checked in, and it was only 3 phone calls, but.
That was to me and Greg, wasn't it?
It was. No, but seriously, rung my friends and family and just checked in with people and just made sure that everyone was doing okay. So everyone just be kind, be generous to everyone, and just we're all going to get through this.
Yeah, I've been saying to my family, but also other friends who have also been, some I know have been struggling a little bit, and said, it's really the way you look at it. You can look at it with things you can't do, and that won't take you down. Where does that lead you? What path does that take you down? And it's quite negative. Or you can look at, okay, what can I do? What can I get out and do now? Or what can I do today that makes life a little bit better, or something different than I would normally do? Because it's not nice and we don't like it. I'm not pretending it is, but what you do is the way you look at it depends on your outlook and how you sustain the model. Because with this time will pass. It will pass. At some stage, we don't know when, but it will pass.
Yeah, definitely. And look, we're all time poor in the normal rush of society, and now we all have a lot of spare time. So that thing that you wanted to learn, that instrument you wanted to start playing, whatever that bucket list tasks that you haven't had a chance to get to, whip that back out and have a look at what are those things that you can actually sink your teeth into. I've started to do a couple of those things.
Yeah, I've started to pick up the oboe. I used to play the oboe when I was in high school. And my neighbours are complaining. No, I'm only kidding.
Did you say you used to be a hobo?
No, I used to play the oboe in the school band. The reason being because everybody else was already playing clarinet. They needed somebody to play the oboe player, and I really wanted to be part of the band. So I said, hey, I don't even know what an oboe is, but I'll play it. And then up comes this long instrument with this reed. Oh, and my lips were sore for weeks. My mouth. Anyway,
we'll put a link in the show notes for what an oboe is, because I have absolutely no idea.
So today's episode of Bricklet Buzz Live is a bit of a catch up on the market, because obviously over the last few days, some more news has come out, more data has come out from July regarding movement by the Reserve Bank. CoreLogic has brought out their updated home value index for the month of July. And that's some of the stuff that we're going to have a chat about. But there's a lot of buzz going on at the moment.
Yeah, there's a lot of new information coming out. Obviously, the RBA coming out, leaving rates on hold and giving an indication that rates won't be moving, regardless of what's looking at inflation. It's going to be interesting to watch the inflation rate over the next 90 days, with the economy pretty much grinding to a halt for the last 5 weeks, or the biggest economy in Australia definitely grinding to a halt, being New South Wales. I think that's going to put a dent into the inflation numbers. So we're going to see this lower for longer interest rate environment stay on, and the flow and impact that that's going to have in property will be, I think it will be that property interest rates will stay lower, more people will be able to afford higher prices. So you're going to continue to see that upward pressure on property prices when real estate agents can do open homes again.
Well, I mean, the interesting thing, though, is that obviously before the Reserve Bank made the decision on Tuesday to hold rates steady, there was a lot of speculation, a lot of chatter in the marketplace around interest rates actually moving up.
Yeah.
And now a lot of people, again, have taken a bit of a backtrack on that or kept a bit of a low profile because before Tuesday they were talking it up, but now obviously it's changed. It changed our perspective on things.
Yeah, I find it really interesting. The governor has come out multiple times and said he's not interested in increasing rates until we get consistent, fours in full employment. And we've only just hit it just a little bit. Now it will regress again. So I think that's, he's been quite clear on that. I'm not sure why there's so much chat about, it's going to go up, because he's been quite clear in wanting to get the economy going again, because they've had a real hit. And there's also so much uncertainty. Comes in, then where it closed down again. In, closed down again.
Yeah, but as our politicians were telling us in 2008, just before the world economy fell off a cliff, we can't let that inflation genie get out of the bottle. And I think that's what they are potentially worried about. But I think they're looking at multiple different things. So they're not just looking at inflation in Australia. They're really trying to get back to full employment, where if you look at how Australia performed against the rest of the world, our recovery through both the global financial crisis and the global virus crisis has been phenomenal. So we are best of breed in terms of our Western world recovery from both of those crises. And this next little blink that we're sort of going through now, it's going to be interesting to see how we get through that. But it's also telltale that the government's actually not looking at pumping a lot of extra money into the economy right now. They're really just saying we're going to keep businesses afloat and we're just going to see how we progress through the next sort of 90 days.
Because one of the other things that they announced obviously on Tuesday was the amount of bonds that the Reserve Bank typically have been buying on a monthly basis. And I think they were buying, $5 billion worth of bonds every month?
Yep.
But they've reduced that by 20%. So they're going to continue, but they've reduced it to $4 billion.
Yeah, that's the tapering.
Yeah.
And most Western world governments out there at the moment are buying their own bonds and putting on the balance sheet. So what that basically means is that the Australian government is borrowing money and then putting that debt and asset on its own balance sheet. So it's a very interesting way to be able to fund an economy. Wish I could do that. Unfortunately, us mere mortals can't, but governments can.
Also, the RBA was saying that they'll maintain flexibility over that too. So that's what they're doing at the moment. But they see a regression, they're going to say, well, we'll change tack depending on what happens, and that makes a lot of sense.
Well, and the reason that they're doing that is the world is never going to go back into a Great Depression, what they saw in the 20s, because that was created by a liquidity issue. So there was not enough money in the world to fund all of the expenses. And that's when you saw, that was the Great Depression, you basically wiped out 20 to 30 years of actual growth in the global economy. And the world leaders, world bankers have basically made the decision that they're never going to go back into that type of scenario again, which is why they're providing, all of this liquidity into financial markets and into governments to be able to continue to fund the expenses of running countries.
Yeah, and obviously, another report that came out in the last few days was from CoreLogic regarding the home value index for July. And we've obviously seen another month of pretty strong growth in the Australian housing space.
Yeah,
I think a lot of that. Go, Gregory.
No, it certainly has. It's whilst it's eased a bit, it's certainly still quite strong in the growth. Although it's eased back, Sydney's eased back to about 2%, I think, in July, but that's coming from a high of 3.7.
Yeah,
exactly right. So kind of abnormal highs.
Yes.
What you'll also see through that period is a lot of those settlements that are coming through, those transactions were transacted earlier this year. So that's with those 6 to sort of 12-week settlement periods, which people are sort of looking towards now, or minimum of sort of 6 weeks. A lot of the sales that are coming through last month were actually transacted at minimum of 6 weeks ago. So I think you'll still see some quite strong price coming through even at the end of August. But there'll be a tapering coming off in September and October because the number of transactions have gone down. But I don't think it's going to have an impact on pricing. I think pricing is probably going to stay fairly stagnant, if not continue to sort of creep up, because the buyers in the market and the sellers are sort of being pairing off.
What's interesting, they're also suggesting, like happened last time and shut down, And they've seen it in Melbourne. As soon because the pent up demand keeps building, the longer we're shut down, because there's a real shortage of properties on the market. When they open it back up again, it might take off for a little period again, because there's so many buyers out there and just not a lot of properties. Although there is a lot of properties held back at the moment too, so it'll be interesting to see.
Well, because I mean, the typical selling season in Australia, the strongest selling season is coming up.
Spring and summer.
September, October, November. Yep.
Because I mean, in the report from Tim Lawless, chief economist over at CoreLogic, was saying that dwelling sales are tracking approximately 40% above the 5-year average, while active listings remain about 26% below the 5-year average.
That's supply and demand.
The
demand is greater than supply, is basically what it's saying.
And that's economics 101, isn't it, when it comes to pricing?
And that's why pricing has been driven up so high. But again, the predominantly all of those buyers are owner occupiers as well. There's only a very small portion of those that are investors. And that's also why my view on it is the property prices are going to continue to stay quite level and strong, because it's predominantly owners either upgrading, pretty much just upgrading their properties at the moment.
But that was like the discussion we had with Paul Ryan,
last week,
economist over at our REA Group, was saying that the big players are owner occupied because we were all talking about downsizing before COVID, or right sizing, they used to say, but now people are really evaluating, saying no, they actually want to move back to a larger home because we could be spending more time at home, needing space to work. More place to hang out, whatever you need. But so people are moving into larger premises.
And more companies are accepting work from home as just a full-time office space available. So LinkedIn's basically come out and said, globally, we're not going to require any of our employees to come back into the office. If you can work from home and your role has that ability, then you will be able to work from home ongoing. So this is going to be very interesting to see how this impacts the labour markets, and then also the property markets, because I think you'll see a lot more people moving out of the big cities and have that sort of tree change or sea change, or move into bigger spaces that are more affordable because they don't have to commute to work every day.
And again, that was part of our conversation with Paul Ryan, last week, around this migration, domestic migration, moving outside of the cities and moving into regional areas, or these fringe areas where you still have a relatively doable commute back into a city location, but you're still getting the lifestyle change that you were looking for: more space, time, a whole number of things, affordability,
smaller mortgage.
Yeah, absolutely. And that obviously has a big impact on the overall well-being of the family unit, whatever that looks like, because if you don't have a massive mortgage or a massive debt hanging over your head, and you still have the ability to earn good income, all of a sudden life looks a little different.
Or you can achieve financial security a lot faster. So one of your biggest expenses in life is housing. So once you own your home, then 30% of your salaries typically goes towards housing. But if not, in Sydney, it's a lot more. It's up around 50%. So if you can eliminate that particular expense in your life, in your lifestyle, then what that means long term is that you're going to be 30 to 40% better off on a cash flow basis every month.
Yeah, and that makes a big difference.
One of the things I found really interesting from that report was sort of supported what I've been thinking for a while now with the units, particularly in Sydney and Melbourne. And they're saying the national house values are up 18.4% for the 12 months in July, but unit prices have only risen about half that amount, 8.7%. So what that says to me is that house prices are getting harder to, getting more and more unaffordable for some people.
Yep.
The unit prices have stayed quite steady. And what that'll mean generally as the market continues is that the units will become more of that's a good option for us. We'll go into a unit.
That's right.
So in my opinion, if you can get into a unit now in Sydney and Melbourne in a good location, I'm not talking about outline play, but a good location, then I think you're going to have a good time going forward, particularly when COVID, the restrictions are eased in the next, whatever time. And they're actually saying that. So I thought that was a really, reading between the lines, I think, wow, now's a good time to get into those.
So Greg, when you say good location, what are some of the things that you're looking for when you're considering good location?
Yeah, the lifestyle location, something like on the northern beaches or eastern suburbs or low North Shore, particularly close to transport, like public transport, being great bus service or really good, either the metro or trains. And also, which goes in lifestyle, which is your amenities, which is your shopping centres, your cafes, your restaurant, that sort of area. So it's not too far to get into town. It's easy to get into town through public transport, or even on a freeway if it's really close. But those amenities and the lifestyle, particularly, we've seen that on the northern beaches. The prices significantly grow, outstripping other parts of Sydney. And I think units have held up fairly strongly in those areas, and they'll continue. It's interesting. There's another part where they talk about Hobart. So this is where they have seen it. Hobart, the unit prices have outstripped housing price growth. And the reason they believe that is because a lot of downsizing people, so that the pricing of houses is getting it beyond people, so they're going back to units, and that's pushed the price of units up in Hobart. It's the only city where it's done that so far. And I think we'll see that replicated in other cities as we go forward in the next year to 2 years.
And looking at it from an investment point of view, if you look at any type of asset class and you see one, say, asset class, which is, say, residential property, if you see a divergence within that particular asset class between houses, townhouses, and units, you need to look at what the reasoning is behind that and then think about, okay, well, if there is that kind of divergence there, what's that going to mean in the next 3, 5, 10 years? Where units and townhouses, you're typically going to be getting a bargain now because the valuation has lagged for the last 3 to 4 years. And then those will catch up. Similar to when you're looking at some suburb analysis. If you're looking at one particular suburb and that's gone up sort of 10 or 15 or 20%, if you look at all the neighbouring suburbs, and they've only gone up sort of 5 or 6%, well, then what you're going to see is those suburbs catch up to that one that's just gone up by 20%, and they sort of go up in sort of this basis because everyone really, really wants to live in suburb A, because that's the hot to trot place. But then if people can't afford to live here, well, then they're happy to live around there because it's price comparable. And then as the price comes up, well, then actually people want to live here, and you see this.
That's exactly right, man. 100%. Yep. Property prices aren't in a linear fashion. It would be really easy if everything just went up by 7 or 8% every year on year. But what you see is, like all markets, you see some stagnation of prices, then some increase, maybe a little bit of pullback, some more stagnation and up. And that's typically how you're going to see a property market go over a prolonged period. You're looking at things 10 years, 20 years.
Well, and that's the thing with the property market. It's not about trying to time the market. And it's been used a lot. It's all about time in the market. So the sooner you can get in and the longer you stay in is when you're going to reap the rewards.
Yep. And then so the things that you're looking for really is that if you want to be holding that property for a long term, then you're really looking at what is my yield today. So what is the income that this asset is going to be generating for me today? And that's specifically what we're looking for when we're looking at building out a Bricklet portfolio. What is each of these individual investments going to be yielding for us? Because it's all positively geared. So what that means is it's going to be paying you cash flow on a monthly basis. And you want to make sure you can maximize that and be in a good growth area. If you can achieve above average growth, fantastic. But that yield is what's going to pay you that income stream over the next 5, 10, 15, 30 years. It's going to allow you to then continue to buy more investments.
I thought other interesting thing that Tim Lawless had written in his report was, he said, with dwelling values rising more in a month than incomes are rising in a year, housing is moving out of reach for many members of the community.
Hence units, I agree, and hence units will be more attractive in those communities because they'll then look at that. They might not want to go to a unit for a start, but then what happens is you go, well, that's too expensive. Where do I go next? Oh, a unit, that'll do. And they'll start there potentially. Not everybody, but there's a number of people that will do that.
And I think what you're suggesting is, start looking at it now, sooner rather than later, and just weighing it up, do your homework. It's like, like anything, do your research, do your homework, understand what you're doing, do your numbers comparing an apartment to a house, have a look at what the impact's going to be on you, but it's going to potentially give you exposure to the growing market, the market and the asset class of housing property sooner rather than later.
Yeah, and I definitely think looking at buying a principal place of residence or your home, or looking at buying an investment property is two completely different decisions. And I guess as an individual or as a family unit, the first thing you need to get across is, well, what are my goals? So where do we want to be 10 years from today? Is it vitally important for us to own our own home, wherever that may be? Or are we happy to rent best? So we're happy to rent where we want to live and then build an investment portfolio so we still have access to that particular asset class. And that's only something that each individual family unit or individual can make a decision on. But it's something that's vitally important to get an understanding of early on, so that then you can put a plan in place and execute that.
Yeah.
Yeah. I thought there was something quite interesting with Perth. You look at Perth, it's been stagnant for a while. It's only gone up the least of all the capital cities. I think it was 0.3%.
Yeah. Yep.
But then you look at the rent changes in the last 12 months with houses and units, and they've gone up 14.6% for units and 16.6% for houses.
Right.
So based on property prices only going up 0.3 on average and rental going up that much, that will start to look as quite a good investment opportunity for people going forward.
And look, over the last 12 months, what we've seen is a oversupply of Australians, of Aussies, of people coming back to Australia and looking to rent or moving back into their home, which they were renting before. Because there were no other rental properties coming onto the market, you've got more renters than there are rental properties available. Cities like Darwin, you had rents go up by 20%. Hobart, they've gone up significantly. In Sydney, parts of Sydney, they've gone up sort of 15%. So that rental increase has been significant. But I think what you'll also see is that a lot more investors have now come back into the market and now resupplying that rental market. So those rental increases are probably seeing their top. And my view is over the next sort of 12 to 24 months, those rental prices will probably be pretty stagnant as investors come in and supply more investment properties in those particular areas.
Yeah, they made a good point saying the investment loans on average are around 2.8%. And the places like in Brisbane, you can get sort of 4%, 4.5% returns. So that's starting to get a really good, that'll be of interest to investors as we go forward because of the return compared to the cost.
And so what Greg's saying there, he's talking about the income return. So he's talking about, I can borrow money at 2.8%, and my rental return on that asset that I'm purchasing is sort of 4.5% or 5%. So you're getting a positive net yield of somewhere between 2 and 2.2% there. So when you're looking at building investment property portfolios, having positively geared portfolios is obviously the best way to do it, but you need to have a look at what fits into your personal circumstances.
Yeah, and talking about Brisbane, obviously there was an article that came out from the chief economist from over at PRD around Brisbane hitting, having a median price mark of $1 million.
Yep.
Moving forward, and I think the Brisbane Olympics is scheduled for 2032.
2032, that's right. Yeah.
Yeah.
Well, honestly, though, I didn't really blow my socks off hearing that or reading that data, because if you look at the average Brisbane prices now of 550,000, if you extrapolate that out and we consider that property prices typically have doubled in Australia every 7 to 11 years, well, that fits in with that narrative.
Yeah.
So I wasn't overly surprised by that forecast.
Yeah. But the thing is, we often get surprised because when property prices double, we all go, oh my gosh, we're in a bubble. And yet the reality is we all, in our assumptions, often allow, say, 7% annual growth, target capital growth.
Yeah.
Yes.
And so if we're using an assumption of 7%, when does it double, Matt?
Every 10 years.
So it's kind of a bit of a no-brainer. Yeah. However, there was some really, really interesting research done by the team over at PRD around the impact that an Olympics or some kind of major event has on a city. And they did their analysis around, the Sydney Olympics in 2000, some of the big events that were held up in Brisbane. And I think it's really good information. So, to help us understand, looking at the Brisbane market now, but not just in the short term, but looking forward.
Yes.
It's the huge infrastructure upgrades that go in. If you look at Sydney pre-2000 Olympics, they built so much better infrastructure that we all enjoyed. The Olympics came and went, but all that infrastructure stayed. Think about all the events that have gone on in that Homebush precinct, and that was a swamp before the Olympics came in. So, and all the different road upgrades and train upgrades, etc. And so Brisbane is going to get a huge overhaul between now and 2030, 2032.
2032, yeah.
2032, yeah. And that infrastructure is then going to stay and keep that city revitalized for many, many years to come.
Yeah, and that's what we're talking about when we first opened up on the conversation today, is about the infrastructure. You know, what drives prices? It's your infrastructure, your services, your amenities. And that these Olympics will drive that in that South, all that region. The report talked about Expo.
Well, they did,
Expo 88.
Yeah, they did the numbers 11 years leading up to the event and 11 years post the event, and they did the numbers on Expo 1988, and they did the numbers between 1977 and 1989, which captures the 11 years prior to Expo 1988. In the Brisbane LGA, and the median house grew by 278.8%. And in that same time frame, the median house price in South Bank and its surrounding suburbs grew by an average of 335.3%. And then looking at the GT Summit in 2014, same 11-year period prior, the Brisbane LGA median house price grew by 112.7% and post 111.6%. And so obviously there is the 10-year time frame that we typically look at pricing double, actually that window actually got shortened as a result of these major events.
Yeah, and it will do so in Brisbane, and what it does is, like we said before, once you go up in that area, they go, we want to be there, we'll go out an area, and then it goes out, and then it just keeps cascading out to the affordability level where people are at. So it just keeps pushing price back. So that corridor also, I think, between Gold Coast and Brisbane, that'll get affected.
Sunshine Coast.
Around Brisbane. Yeah, Gold Coast we've already seen that.
Gold Coast and the Sunshine Coast.
Yeah, lifestyle areas.
Because both the Gold Coast and the Sunshine Coast now, with the improvement in roads, I know the Gold Coast is still working. The travelling between the Gold Coast and Brisbane still has its hang-ups because it's just one main arterial kind of road joining. And if there's an issue, you can get into pretty bad gridlock. But the roads between, going from Brisbane to the Sunshine Coast have really improved those roads at the same time.
Yeah, that's right. And that's what we talk about, infrastructure improvements. And they'll do that for the roads in Brisbane to cater for those Olympics too. They'll improve the efficiency or how wide they are, or how much can flow. There'll be all sorts of things done there. There's big bucks when you talk about Olympics, because they don't want to be embarrassed. They want to showcase themselves. So they'll throw lots of money at it.
And coming back to the median price, the Brisbane LGA median house price has travelled upwards for the past 46 years, recording an $810,000 median house price as of the 30th of June 2021. So it broke the $800,000 mark for the first time in June of this year.
And you think about Brisbane LGA, that's predominantly going to be units. Yeah, so you're going to have predominantly units sitting in there with some really very expensive houses, but there's not a lot of housing in that particular area. Predominantly all CBD, similar to Sydney CBD.
Yeah. So it's super interesting. Quite an area I'm quite upbeat about. Particularly after the announcement, it was already good. I think that just enhances it even more.
And I think also Australians, and also many new Australian cities are now transitioning from CBD areas, which is so business districts, into now residential areas. So, 20 years ago, if you looked at Sydney CBD on a Wednesday afternoon at 6:30, it was empty. There was no one in the city. Everyone had gone home from work. There was a couple of pubs open. If you have a look at it, not maybe today.
It's quite different today.
But now the cities actually have a lot more going on, and there's a lot more people and residents actually living in those CBD areas. So a lot of our cities are being regentrified to actually accommodate all of those people moving into the cities as well, which goes against what sort of just happened with COVID. But I think that trend will continue in a dealing with COVID world. I don't think there's ever going to be post-COVID.
It's just a matter how we
manage it. It's here to stay, so it's going to be how we manage that in the future. So I think it'll be interesting to see, and our cities will have a lot more people living. Like cities like New York, Singapore, Hong Kong, they never sleep. There are people doing things 24/7 every day, every hour, every day of every week.
And that's what I always enjoyed, for example, about Melbourne. because Melbourne is one of those cities. It just, there's the restaurants and the cafes, everything stays vibrant because it's a livable city itself. The city itself was always alive. And I always felt that Sydney
It was never designed for that.
No, it was where you go to work. And now they're trying to
transition.
Yeah. But I think, looking at, we talked a little bit about Brisbane with Paul Ryan, and taking into consideration this report now by PRD with the announcement of Brisbane now being successful in its bid for the 2032 Olympic Games. It would be a sound piece of advice to consider Brisbane as part of a strategy moving forward, if for your property portfolio.
Yeah, I agree. Yeah, for sure. There's no doubt in my mind about that.
Yeah, so if you're looking to achieve those higher end yields, definitely Brisbane you're going to get a higher yield on your rental return than you are going to be in Sydney CBD. And also with the average price in Brisbane being significantly lower, you've got more room to move on the upside over that shorter term. So yeah, I'm definitely bullish on the Brisbane property market.
Yeah, cool.
And that sort of flows on from what we talked about last week with the regional market, some of the bigger regional centres. They'll continue to improve as well, as because Sydney's gone up so much, and that's what 1.4 mil is it average?
Mm-hmm. Yeah,
that number, and that just pushes out everywhere around that as well. And so and also lifestyle centres like Kiama, down to Narra now, with all the roads opening up down through there, the infrastructure.
The south coast of New South Wales,
South Coast, North Coast. It all just starts to push out and push prices up.
Well, the central coast here in of Sydney, New South Wales, has been performing very well over the last number of months. If you can get a property.
Yep. And I also think the greatest Sydney urban sprawl is going to continue. The centre of Sydney previously used to be the central business district in Sydney CBD, and then the second biggest CBD was North Sydney. Now Parramatta CBD is much bigger than North Sydney, and it's actually tipped to be bigger than actual Sydney CBD within the next 10 to 15 years. So the centre of Sydney is actually moving, and that central business district is shifting more to the centre of Sydney, which is around that Parramatta. It will have access to both of the airports. And I think you'll also see that urban sprawl move from sort of that Liverpool area all the way down in that Bowral, all of that sort of area will become part of that greater Sydney area. So this is just more people wanting to live. The city will just become bigger and bigger. So there's lots of opportunities everywhere.
Yeah. I think the key thing is, from all what we talk about, is it's important to get into the market in one way or another, so you can ride it as part of the whole growth, and have it, like you said, Matt, before, have a strategy. What does it want to achieve and how long? Right, start now. Because the longer you wait off, the harder it is to get going, and the further you push back that goal of what you want to achieve. Yeah.
And buy value. So make sure you know what you're doing. So if you are looking at getting into the property market, make sure you do your research, potentially look at hiring professionals like an investment specialist buyer's agent. If you're paying a buyer's agent, make sure that you are paying that particular professional and they're not being paid by the developers. That means that buyer's agent is working for you, and they're going to go out and find you the best deal that they can to fit into your particular portfolio. Same thing with bricklets. So if you're looking at starting to build a bricklet portfolio, speak to some of the bricklet specialists that we have available. They will help you find the best bricklet that's going to be suitable for you and help you tailor that strategy so you can achieve your goals.
Cool. All right. Any parting words, fellas, before we wrap it up for today?
I think that was mine. Just get started. Like, it's really important. The longer you take, and I was listening. So actually, there's one parting word. I was listening to a fairly well-renowned property expert today, and they're saying, well, the bottom of the market's already gone, so you guys that waited off, you're buggered. It's going to continue to grow. and it's like, well, they thought that, and they wanted to wait. It's going to crash. Stop listening to all the noise. Start looking at some of the data and what's happening over the past and what's happening currently. Because the more you wait, the harder it is.
Well, thanks for that, Greg. Thanks for joining us today, mate.
Pleasure. It was good.
Have a great rest of the day.
Yes, you too.
Thanks, Matt.
Thanks, buddy.
And thank you for those who've joined us today. Have a great rest of the day.
Time for a surf.
Time for a surf.
See you guys.
See ya. Bye.